Alright, gang. It's your boy Nature, aka Nature. Alright, so in our next video, we'll talk about how to use moving averages and how to find trends using moving averages. Alright, so gang, let's get right into the next lesson. It's your boy Nature, aka Nature. Gang. Alright, so how to use moving averages to find the overall trend, to find the trend. So one sweet way to use the moving average is to help you determine the trend. The simple way to spot a single moving average on a chart, okay, when price action trends to stay above the moving average, again, when price action tends to stay above the moving average, is above the moving average is a signal that price is in a general uptrend. But if price action trends, if the candles, which is price action, tends to stay below the moving average, then it indicates that it is a downtrend. But if the price action, which is the candles tend to stay above the moving average, it signals that price is a general uptrend. All right, so let's take a quick look at what that means. All right, through this picture, remember, price action tends to stay, if the candlesticks, which is price action, the candlesticks are price action. If they stay above the line, above the moving average line, then the trend is an uptrend. But if you see the candlestick fall below the moving average line, okay, it is a downtrend. All right, so most of the majority of candlesticks, as you can see in this picture right here, most majority of these candlesticks are are up or above the line. So since price, or the candlesticks, which is prices, we understand price through candlesticks, through the moving average. Okay, so through price, through the candlestick, we can see that price is above the MA, and that means that if price is above the MA, it's time to buy. All right, so this is a 10 SMA simple moving average. Okay, on a 10 period time frame. All right, and all the candles are above. And candlesticks that are above the moving average means that price is above the moving average, means time to buy. Okay, so this is an example of an uptrend. All right, and how you can see that the candlesticks, how we can identify the overall trend using the moving average is through, if the candles are above the moving average, then it's an uptrend. So this is how we use the moving average to identify the trend. All right, so that's very, very important. All right, so the problem with this is that it's just too simple. Okay, let's say that the U.S. Japanese has been in a downtrend, but news report comes out and causes it to surge higher. Okay, so let's look at this example. Okay, as you can see, all the candles are below the moving average line. So that means that it was a current downtrend. Then all of a sudden you see a green candlestick close above the moving average line. So you will think that, look, it's time, it's a change in trend, it's time to buy, right? That's what most newbies would think, okay? Because that's what, so far that's all you know. What I'm teaching you is that the moving average, once the moving average cross over above the line, then the trend is an uptrend. Okay, let's see why this is correct or not. So let's say that USD JPY has been a downtrend, but then a news report comes out and causes it to surge higher. You can see that the price is now above the moving average. You think to yourself, it looks like a pair is about to shift directions. Time to buy this sucker. So you just do that. You buy 1 billion units, causing your confidence of the GPY because of your confidence. You're thinking that the US JPY is going to go up. It was a fake out. Okay, it was a fake out. Okay, and that happens. It was a fake out, and the downtrend continues. Okay, so don't just wait. You have to see and be very, very patient and see what the market really wants to do. Bam, you got faked out, and as it turned out, traders just reacted to the news, but the trend continued and price kept heading down. Okay, so it was just a fake out, okay, or a pullback or a fake out, and price wind up faking out and continue heading back. You can see the candlesticks eventually closing below that moving average line again. Once it closes below the moving average line again, it lets you know it's a valid signal that price wants to continue heading back down. Okay, so that's what happened. If people just got in off of the base, off of that one green candlestick, then they would have they would have lost profit, or at least would have been stopped out. If they had at least put their stop loss, they would at least have been stopped out. Okay, so it's important to understand what this means, and fake outs can happen. Okay, so the downtrend did continue, but as it turned out, the traders just react to the news, but the trend continued and price kept heading lower. What some traders do is what we suggest you to do well is to plot a couple of moving averages on your charts instead of just one. This gives them a clearer signal of whether the price is trending up or down depending on the order of the moving average. So that is explained. In an uptrend, the faster moving average should be above the slower moving average. For a downtrend, vice versa. Okay, so the faster for the uptrend, the faster moving average, the EMA should be above, and the SMA should be below. Okay, because it's slower. All right, if downtrend, vice versa. For example, let's say that we have two EMA, a 10-period EMA and a 20-period EMA on your chart. What it looks like is this. Okay, it's the following. Do you notice how the 10 SMA is above the 20 SMA throughout the downtrend? Okay, because a 10-period time frame is closer to current price action than a 20-minute time frame. So this is how you can use both of them together, though, to see the overall direction of the trend. Okay, so it's an uptrend, as you can see that the candles on the are above the 10 and 20 SMA. All right, for a very long time, and even at the end, it did start coming closer below it did go below the 10 SMA and 20 SMA. Right here, it kind of started going below the 20, the 10 and SMA. All the other time, the candles are above the 20, the 10 SMA and the 20 SMA. The candles are above, as you can see, uptrend, and then it started going down. That's just a fake out right there. And as you're thinking, okay, it's starting to change direction. No, it was just a fake out as price continues heading back up in an uptrend. So just be careful of that. Be mindful of that. This is also a good reason to plot more than one SMA or EMA on your chart. Okay, so EMA members react closer to price time frame. So above is a daily chart of the U.S. JPY. Throughout the uptrend, the 10 SMA is above the 20 SMA. As you can see, you can use the moving average to help show whether a pair is trending up or down. By combining this with your knowledge of trend lines, this can help you decide whether to go long or short on a currency pair. You can also try putting more than two moving averages on your chart, just as long as the lines are faster, as long as the lines are in order. Faster EMAs over slower EMAs are during an uptrend. Okay, so you're going to pick the faster one, which is if it's going to be a 10 EMA over a 20 EMA, so the faster EMA over the slower EMA on the uptrend, and vice versa, the slower EMA, so the 20 EMA over the faster EMA, which is the 10 EMA on a downtrend. Then you can tell whether the pair is in an uptrend or a downtrend. So, all right, gang, this is how you identify which direction a trend is on a moving average, whether it's on an uptrend or in a downtrend. Alright, so gang, in our next video, or our next lesson, we'll discuss how to use moving averages crossover to enter a trade. Alright, so that's our next video, how we're going to use moving averages to enter a trade. Now that you understand how to identify moving averages, okay, and identify the trade using a moving average, okay, we're going to now understand what is a moving average crossover and how to enter off a moving average crossover. Alright, so gang, it's your boy Nature, aka Nature. Hope these videos help. Alright, gang.